All right, Ed, let's first start off with the $21 billion question.
Sure.
How does Elon Musk come up with that number?
Yeah, there's certainly options. I mean, now that the board has unanimously accepted the bid, we move from it being sort of a hostile takeover to a friendly takeover, and one option is that private equity comes in, and we could see potentially names that weren't in the hat before, or maybe Thoma Bravo or Apollo come back in. The other is the role of Elon Musk's net wealth, right? We joke that he is the world's richest man, but cash poor. He has around $3 billion of cash and cash equivalents, although a fantastic piece on the Bloomberg today that explains we don't have full visibility into his private wealth, right? Some of his investments in his portfolio might have done better than we know. He could be more cash rich than we know, and so he could front up the cash. But more likely, you look at the role of Tesla stock, not necessarily that he'd sell it down, but it could be collateralized, just as it is in the margin loan portion of the debt financing. He could borrow against those holdings quite comfortably, as he's done for many years, and come up with the cash that way.
Ed, we're going to get earnings in a few days. And I'm curious to come to another number, which is the 54. How do we get there? Are the earnings going to justify that number? I'm really fascinated as to ultimately how we came up with this figure and how we know that that is what Twitter is really worth.
Yeah, I mean, sources tell me that during a town hall last night in San Francisco, Brett Taylor, the company's chairman, stood up and virtually said to all the attendees that the board had carried out their fiduciary duty, that this was the best deal for the company, that it was the best deal for shareholders. $54.20. There's question marks around that, right? You know, the company priced its IPO at around $25 a share. The first day of trading back in October 2013 was $45 a share. If you look at it from that standpoint, you've got compounded annual growth of just 2%. Or in other words, if you bought shares on Twitter's debut trading day back in 2013, you've made $9 a share on your investment, which doesn't seem like much. And a year ago, you know, April to August of 2021, the shares traded between $70, $75 a share. I think the big question is, where was the growth going to come from on the top line? Where was the growth going to come from on the bottom line? Twitter hasn't monetized through advertising as well as the street expected it to or hoped it would.